Hello, we are Sales Tax and More.
Today, we're going to answer some FAQs about rates and sourcing. This will be the first installment.
Question 1. How do local tax rates affect remote sellers? Local tax rates make life a lot harder if you're a remote seller. In general, if you have a single location where someone comes into your store, then they pay the tax and you collect the sales tax. However, if you're a remote seller, you tend to be selling to the entire country. You charge the rate where the sale is going to be sourced. Sourcing simply means which state has the right to tax the sale. But there's around 7,000 to 16,000 different taxing jurisdictions in the country. This can make things a lot harder for remote sellers when collecting sales tax. Question 2. What determines whether a remote seller will be subject to it? When it comes to tangible personal property, it's generally going to be where the purchaser or a representative of the purchaser takes possession. In other words, it's where the TPP is being shipped or where the purchaser is coming to pick it up that will determine whether a remote seller is going to be subject to the tax. In addition to that, the type of tax can determine whether a remote seller is subject to it. A seller may or may not have to collect a local tax depending on which state it is, whether they have nexus in that state, or if they've registered voluntarily. Question 3. Are there any exemptions? Yes, there tends to be an exemption to every rule, but in general, remote sellers are going to have to collect the local tax rates. Previously, this wasn't the case. Before 1977, they rarely had to collect tax on interstate sales, and after 2018, that got blurred even more. Nowadays, though, be prepared to collect the local tax rates. For more information and other free resources, including webinars, blogs, and podcasts, or any questions, you can reach out to us at salestaxandmore.com.